Like it or not, the month of May was busier than expected. We had more new listings, which resulted in more homes going under contract. In today's video, I'm going to take you through everything that happened, explain why it actually looks like we're heading back towards 2023 levels of activity, which would be a step up from what we did see last year. So if this is your first time watching these market updates, first we talk a little bit about where we're coming from, and then we go through all the visuals explaining not only where we are, but that help us see forward to then talk about what is likely coming. So mortgage rates have gone up again a little bit, nothing super material. I would say we're probably around 6.825, 6.875, but bottom line is we're up from the 6.5 that we were at the beginning of last month, closer to 7%. Where that lands at the end of June is anybody's guess. The Federal Reserve may cut rates in July. There's an 80% chance out there right now in the betting markets that that is going to happen. Me personally, I think they may hold off until September or maybe even later based off of the inflation metrics that we're starting to see too, that are coming down a little bit. Now, inventory did spike in May. That is normal. Here in June, we are already back down a little bit closer to where we started the month of May, which again is pretty normal. We tend to see inventory spike through the spring, drop down into the summer, and then pick back up as we get closer to the fall and September. So the good news about inventory rising is that we had more choices for people. And accordingly, as you'll see here in a minute, the amount of homes going under contract picked up in May based off of seeing more new listings, having more choices. So inventory is strong, activity is still strong. Days on market is rising a little bit, and prices, though, are continuing to rise for condos. Single families are leveling out. And again, we'll talk more about that here in a second. But compared to where we were last month and the previous year, we're about where we should have expected, right? Mortgage rates are a bit higher than both of those, as you can see here. The one piece that I can't do quite yet, because we're still waiting on about 15% of the homes that were supposed to close in May are still not marked as closed in our MLS. Therefore, I don't know what the final sale price was. So I can't calculate this just yet with any degree of confidence or accuracy, but it's going to be somewhere in the mid 90s for both. Nothing really jumping off the page here. But new listings, you're seeing it start to build. And if we are going to fast forward, let's say 6 months to a year, I have a feeling we start to see the curve increase a little bit. It's not going to go back to the 2020 levels of spikes where we're seeing 200 new listings a month. But I do think we start to push it comfortably above 100 in those busier months. Whereas right now, if we hit 100, that's a huge month. Now, the pending sales, obviously, again, this is the strongest May that we have had equivalent to 2022. And then before that, they were stronger because we had more inventory and more choices. But this was the strongest month that we've had in a bit for Mays. And what we see in June typically, at least the last 2 years, is a small inch up. Now, whether we see that again, time will tell. I have a feeling it's going to creep back down a bit just because, again, looking at where we were January, February, and April. March was obviously an anomaly there. It's a bit higher than the norm, and typically we do see things level out this time of year. Closed sales still very strong here, and again, those little red tips are all of the closings that I'm waiting to get data for. Agents are just not being on top of their game and not closing things out appropriately, and unfortunately, that affects our data and our ability to really finalize things too. But months of inventory for single family starting to pick back up, which it normally does going into this time of year anyway. Again, the talking point I've had on the slide the past few months is when are we going to see that start to pick back up? And I think we're finally where it should be. And single family home median prices, and this is the same for the mean too. We're kind of fluctuating, bouncing around a little bit. We just had a strong month fall off this 12-month rolling average, that 13th month now, which was April last year. The average sale price, or the median sale price, was 2.8 million. So that really did keep us bumped up a little bit. But the same can be said. We currently have a $1.2 million median price sitting in there from, I want to say it was 7 or 8 months ago. But eventually that'll fall off and that'll result in it picking back up. But I expect us to fluctuate within this range. I would say the 1.75 to 2 million for the foreseeable future. No huge dips, no huge spikes either. And days on market, again, growing, but fluctuating a little bit here as well. And again, this chart only goes back to 2021. If we go back before that, we're essentially getting back to normal as far as how long it takes a single family home to sell. In the 70s is what used to be normal, 70s plus. So we're still better than we used to be pre-COVID, but we're getting there. Now, condos, again, incredibly resilient, incredibly strong. This is years running. And as a result of this, the months of inventory not really pushing towards that 6 months of inventory there, we're going to continue to see sellers having the upper hand. And that is reflected in these continually rising prices. We don't have that moderation that we saw in the single family world. And, to a point, it's a little surprising, but I think as long as we do have people who want to be here, which is going to be forever, and they tend to have the funds to do so, maybe some people have been priced out of the single family world, right? A lot of people we know have been priced out of the single family world, but that doesn't mean they're going to give up entirely. There's still some very, very nice condo duplex units that will work just fine, that serve the purpose, serve the needs, allow families to build memories. So that's going to keep driving, I think, as even as the single family market moderates a little bit. I don't anticipate that hitting the condo and townhouse space yet. Days on market again, lower than what we saw with the single family. And again, it's all indicative of the condo market being incredibly resilient and strong in terms of consistent demand versus the single family world. We do have less inventory. The prices are way higher. The variance, therefore, can be a little bit more, but incredibly strong market. Speed here with May almost equaling where we were last May. It's nothing too surprising. We had more new listings and more homes go under contract. So this basically stays in line with where we would have expected around two, which is basically saying two new homes are needed to get one home under contract. Two new listings, I should say, which is pretty consistent. Again, looking at these over the past year and a half or so, it's been incredibly consistent between about 1.75 homes, new listings needed, I should say, and two in order to get one under contract. So before we talk about where we're going, I noticed something when I was pulling all this together is we're starting to see activity levels more similar to what we saw in 2023 than 2024. And to give you the short version of everything I've been talking about for the last few years is basically 2024 almost duplicated 2023 just at lower volume levels. And that was almost a direct result of lower amounts of new listings. Well, now as we're seeing new listings picking back up, we're about 12% up on where we were last year. We are seeing the homes going under contract picking up as well, about 14% more than the same period last year. And both of those are almost identical to what we saw in 2023 in both categories. So what that tells me, if I had to take a big step back, is that volume levels across the board are increasing. More people are feeling like it's time to get off the fence one way or the other. People are being a little bit more decisive than they were last year, waiting to see a little bit of what was going to happen, whether it was the election, whether it's you name it. There's a lot going on now, just like there was a lot going on then. It's just we've been in that era, let's say for a year plus, and people I think have enough information to make whatever decision they needed to make about selling and or buying. Still plenty of people selling to move up and upgrade. Still, a decent amount of people cashing out and moving offshore or foregoing the second home, at least here in Ocean City. So going forward, again, Federal Reserve is what I have my eyes on, and the inflation reports and metrics. And again, if this is your first time watching these, I go very deep in the data behind the scenes. I don't always talk about it on here to come up with predictions. At the end of the day, nobody knows, right? I will be very clear about that, but my predictions are always based on the data. And so far, they've been pretty darn accurate. If you want to go back and look at the prediction outcome videos that I've made, feel free. But I tend to be pretty darn close across the board with what I think mortgage rates are going to do, what I think inventory is going to do, and prices. So the mortgage rate piece, I have said all year so far, I don't expect any change from the Federal Reserve in the first half of the year. Now that we are through the first half of the year almost, and the next opportunity for the Fed is to potentially adjust rates or cut rates in July, I just don't feel like there's a need yet. The only real metric that has cooled from an inflation standpoint is called supercore inflation, and that actually dropped for the first time in several years. Now that's 1 month of data. I don't recall ever seeing the Federal Reserve acting on 1 month of data. They typically need to see multiple months of data to ensure that they are making what they feel is the right decision. That has led to the general opinion that they're sometimes too late to act in either direction, whether that's raising rates or cutting rates. But they've given us enough, I'll say, history in their decision making where I think I would be surprised if they did cut rates in July. I think it's more likely that they may wait until September after a few more months of data come in. And if it's warranted, then I would not be surprised to see them reduce their prime lending rate in September. Now, please don't hear that and think that means mortgage rates are going to come down. The last time the Fed cut rates, which was last fall in December and September, as you can see here on the slide, mortgage rates actually went up. They are not directly correlated. They tend to move in the same direction, but it is not a guarantee. There's not a direct link between the two. But a change in Fed policy would likely be a signal to investors, to traders, of what may be coming. And their decisions may impact mortgage rates in a way that they could change. Again, whether up or down, it depends on how the investment markets react. So I think we're pretty much where we're going to be for the next 2 months. I think we'll still bounce around the 6.5 to 7 range. I could make a doomer case that mortgage rates may go up should the Fed decide to make an action or not take any action. But from the beginning of the year, I said I don't see rates going above 8, and I think 8 would be a worst case scenario. I still stick with that. I'd be surprised at this point if that did happen. But I think by the end of the year, best case scenario, maybe we're down to 6.25. Right? We're not going to see fives. I would be floored if that happens. So although this does have an impact, obviously, if you're buying on your monthly payment, what it's going to cost, I don't believe that it should be a decision-making point, that you're waiting for a certain rate versus what it may be now, because I just don't think it's going to be material enough to make that big of a difference. Usually the holdup down here is finding the right home. Yes, sometimes price is the sticking point on that, and I totally understand. But the mortgage rate tends not to be, or it shouldn't be, in my opinion. And yes, you'll hear lenders say you can always refinance. You'll hear people say, just get your foot in the door here in Ocean City. You can always move up to the property you really wanted a few years from now once you've built some equity. But moving is expensive. Doing any of these things, even refinancing, can be expensive. So I believe it's a property first. That should be your determining factor. If you found the right property, and obviously if you can afford it, which is number two, there's little reason, in my opinion, not to at least consider making the decision, making the move, because Ocean City is as resilient as it comes. You can ask anybody who has purchased here, whether it is a new construction home or a 1900s home or a one-bedroom condo or a six-bedroom house. Very few people have had bad outcomes by investing in Ocean City. And that's on a financial side. That's not even mentioning all the memories you can make with your family here and now, instead of waiting until the kids maybe get too old to want to be down here all the time. Or if they're in college or graduating, then they're tied up with jobs or kids, who knows? So point of all of this is the market is going to continue to shift. I think we're back onto historical patterns where we should expect inventory to dip down a little bit as we head into the summer. And then we'll start to see a handful of potential sellers putting their home on the market saying, I want a fall closing, right? I want to spend my last summer here, but I'm not closing until September or October. That's usually the start of the curve where we see inventory start to grow into the fall. And then it should die back down again toward the end of the fall and into winter. And I get the question all the time, when is the best time to buy? From a strictly personal standpoint, it depends on your criteria, your factors. But typically, the best deals and values are had in that late fall, early winter timeframe when sellers are quite tired of holding onto the property and seeing it not sell. They don't necessarily want to wait until the spring market rolls around. That is usually when you can strike the best deal. And in the past, that was, hey, there's not multiple offers on it. Now it is, hey, you may be able to actually get a decent amount off the asking price. And that's not 20%, that's not 30%. You're lucky if it's 10%. But it's still better than paying the going rate for sure. So I expect more of the same throughout the rest of June. And I'm excited to see what June does bring, what the Fed decides to do in July. But I will be coming out with another video mid-June to see how June is looking so far, so that, again, we can see if I'm staying on track or if things have changed and we need to adapt and reassess. But if you want any help, if you're looking to buy down here, I'm more than happy to share with you all the data I have to help you make the best decision. If you're looking to potentially sell down here, I've talked a whole lot of people out of selling because I just don't believe in it unless you really have a strong alternative for doing so. If you're going to reinvest in Ocean City, that's great. If you're going to upgrade your primary home, that's great too. But if you're just selling because you're trying to time the market, we should absolutely have a conversation as to potential downfall of that. Because again, I've heard stories of people doing that going back to 2020 and 2021, and they haven't been able to get back yet. And here prices have essentially doubled. So they're probably out for good. And it's one of those things that timing the market rarely works. So if you want some guidance, want some help, I do have room for a couple new clients I could take on now that we've had a couple closings over the last week or two. And I'm looking forward to helping more people throughout the summer. But if you have any questions, reach out any of the ways you see here, or feel free to drop them in the comments. I appreciate you hanging out with me as always, and I will see you next time.